Let's talk about money and how you need to manage your business revenue. Check it out. Fam, what's up? We are back on the Less Business, More Profit series, all right? Let's talk about money management and really more importantly, how you need to manage your business revenue so you reach that level of consistency. You reach that level to the point where your business can actually stand on its own two legs and you can grow along with it, right? Before I do that, I'm gonna ask you to do me a favor, make sure that you subscribe, like, and share. If you like the content that I'm putting out there for you guys every single week, do me a favor and help me reach more people, right? That's what this is all about, paying it forward. So make sure to subscribe, like, and share. Every time you do that, the algorithm picks it up and then pushes it out to more people. So help me do that. Drop a comment if you have any questions also right below the video, and let's get rolling on this. So, all right, let's go back to business revenue. Let's talk about money management, right? One of the biggest things is I mean, how many times have you seen it where you're working on the business and generate some profit, right? And you don't know exactly where it's going. You just know you're making some money, and then you have a bunch of expenses going out. And the next thing you know, your P&L comes in. I remember when this happened to me the first time, right? I broke $1 million in revenue, and I had no idea where the money went. My business, I felt like my business was still in the same, rat race type of setting. This is when I launched my first business. I didn't know where the money was going. I didn't feel like I had built enough into it so that it could actually stand on its own 2 feet and I could produce from it, right? Or build it up or hire more people or grow it or scale it, right? People like throwing around the word scale, but you either scale chaos or you scale systems and profitability. It's one of the two. So anyways, for me, it was a big realization, right? I had to come to terms with the idea that I had no idea where my money was going. I really didn't know what I was doing wrong. All I knew was that my money management was not on point. So I started doing a couple of things. And what I'm going to talk to you about right now is a few basic principles that really helped me get a grip on my money management, my business money management, right? Now, this is very, very important. I want to highlight the fact that this is not accounting or tax advice, right? Follow me. I am not a CPA, not your tax professional, so make sure that you talk to your CPA or your tax professional about this kind of stuff, right? This is how I have my business set up, and this is what took me a couple of years to figure out, just because I didn't know what I was doing, right? And as entrepreneurs, 99% of the time, we just don't know what we don't know. So I went a couple of years without structuring my business like this. The money was just, fleeing the business as soon as it was coming in. So it was a game changer when I figured this out. Okay, so the first thing is know what you eat. Okay, eat is earnings after tax. So know what your earnings after tax are. Make sure that you start allocating, because I would get hit at the end of the year with thousands and thousands and thousands of dollars in taxes. So I was getting revenue from the business and paying myself out of the business. And then at the end of the year, I would have to give a whole chunk of it back because I had taxes to pay, right? So it wasn't really all profit. I mean, I saw it as profit coming in, but really I had to give it back to Uncle Sam at the end of the year. So one of the big things, big game changer, was knowing what I was eating, right? What were my earnings after tax? And then I started allocating 16 to 18% of the net profits to tax allocation. So I actually set up a tax account, and before I paid myself owner's draws, meaning the excess profits of the business, right? Like the cherry on the top that we're trying to get to as entrepreneurs or as business owners. Before I tapped into that bucket, I would allocate 16 to 18%. And I started at 16 and then I bumped it up to 18%. But that's kind of like the math that worked out for me based on things like deductions, business expenses, and depreciation and all that stuff. So after we factored all that stuff in, I would still have to put about 16% into that fund to make up for the taxes that I was gonna have to pay at the end of the year, right? So I started doing this, and guess what? Yeah, my revenue didn't look all blown up, but it wasn't a fake number, right? I was actually taking home that amount, and I was allocating this amount for taxes at the end of the year. So taxes got paid through the revenue that was being generated by the company. And I mean, I knew really what I was making. I didn't have to worry about a big, massive tax bill at the end of the year. So that was huge, number one. Number two, putting back no less than 30% of the net profits back into the business. Net profit meaning after you paid your expenses, you have your marketing budget, you paid your salaries, you paid all that stuff, and then you still have an amount of revenue, right? And you can do that a couple of times a month if you're in an accounts receivable type of business, or for example, if you're in a wholesale business that's being profitable like mine, it's you get paid on a big massive deal, and then you allocate the money for the expenses, so you pay off the budget, the commissions, and all that stuff, and then out of the net profits, I would still keep 30% in there, not necessarily to scale or to ramp up the marketing or anything like that, but just to have it as a consistency on operations. I mean, really, you want that sustainability, you want that consistency in your business, and this is how you do it. You can't do it on an empty account. If you can't keep the lights on, if you get hit with something that you weren't accounting for, you're gonna be in trouble, right? But if you get into the habit of just leaving 30% into the OPEX, operating expense account of the net profits, that account is going to start building and building and building. Next thing that happens is that you have opportunities that come at you, and you have the ability to invest. You have the ability to scale up if a new market opens up or do whatever, right? But it's now it's a methodical process, as opposed to, oh cool, I see an opportunity over there, I'm gonna take money out of my personal account to pay for it. No, you have the business doing the work, right? And you have a controlled earnings from your side. So this was huge. The tax allocation, that way I wasn't getting hit, and then putting 30% back into the operating expenses of the business, of the net profits. This is net profit again. After you have all your expenses paid, you end up with net, right? So the first part is gross revenue, that's before expenses. Net revenue is after expenses. Out of that, 30% would still stay in the business account. So I didn't take it all out. If I made $100,000, I wouldn't take out the $100,000 net profit, right? I would take 70 and then leave the other 30 in there. So do the math, and then this is my structure. This is how I pay myself through the business, and how I take the cherry on top, which is the owner's draws, or the percentages, right, that we want to take as business owners, because we're not just working for a salary. I mean, we want to thrive when the business is thriving, but you want to do it in a methodical way. You want to do it in a way that it's sustainable, and you're not actually limiting the business. You're not making or cannibalizing your business because you want to make more profit. You're being methodical about it, and this process just works. And again, this works for me, right? So first thing, I have a salary. I pay myself a salary out of every single business that I own. That's number one, and that gets rolled into the regular expenses of the business, along with payroll, along with commissions and all that stuff. It's part of the business expense. This is my way of paying me first, right? So my salary is rolled again into the expenses of the business. You have the ability as a business owner to take excess proceeds or excess profits, and then put those into your bank account, right? Pay yourself out of that. I do those as owner's draws. So I'll do owner's draws. I used to do it every month. Now I step back from it and I do it every quarter, just because I have the ability to keep that control over the business. But this is how I pay myself, right? So this is the cherry on top earnings. This is a consistent salary. It's coming in, and it's sustainable. It's just part of the business budget, right? Anytime the business is great, say that we generate another $150,000 or $200,000 or whatever, and it's excess profits, I'll still leave 30% of that in there, and I can draw out the rest of it, right? So this is where the big bonuses, personal bonuses really come into play. But this is how I break it down, owner's draws. Now, the third thing on my structure was I am taxed as an S entity. I'm not an S corporation, so I'm still filed as an LLC. And again, I am not a tax professional. I'm not a CPA. This is just what I was told that works, and this is how I have my business structured. Maybe I'm revealing too much, but I don't care. So tax as an S entity. Right? S entity prevents double taxation. So you will pay taxes on the salary and stuff like that, but there's limits on what you pay when it comes to owner's draws. So it's just a good way to structure your business and file your income taxes so you don't get hit with double taxation. Again, talk to your CPA about the benefits of filing taxes as an S entity as opposed to an LLC. Right? Money management 101. Recently, I was at a mastermind, and the super wealthy guy was doing a breakdown on how he runs his business and all that stuff, right? The biggest thing that he had to say, and this is because that's what he said, right? This is the biggest thing I gotta say. If you take anything, away from this, take this. It's that we spent so much time mastering the vehicle of what we're doing. All right, so if you're in real estate, you spend so much time mastering real estate, figuring out addendums, figuring out strategies, figuring marketing and branding and all that stuff, right? And yet what we ultimately want is to have that financial freedom in place, right? But we don't spend enough time mastering that. We don't spend enough time studying money management, studying what to do or understanding, learning, what to do with money once it comes in. We're so worried about making the money that when it comes in, it goes out just as fast. It's like a fart in the wind. You lose it really quick. Why? Because there's no money management in place. So having that awareness really was a game changer for me at a personal level. On the next video, on part 2, this is part 1 of money management. I'm gonna make it super simple, but on the next one, I'm gonna show you guys how I allocate my personal finances. So these are just some strategies that I use in the business, and there's a lot more to it, right? But these are some of the biggest ones. And on the next video, I'm gonna show you how I allocate my personal finances. Again, I hope this video makes sense. I hope you find it helpful. And do me a favor. Again, if you like the channel, if you like the content that I'm putting out there for you guys on a regular basis, do me a favor, make sure that you subscribe, like, and share, and just, spread the word, pay it forward. Every time you do that, it allows me to reach more people and make a bigger impact, right? So that's what we're here for. Until next time, stay focused. You got this.